Morning, everyone. Welcome to the macro snapshot for Wednesday, December the 17th, 2025. Fairly quiet overnight session with not a huge amount of volatility. Just looking at the ES here, so the S&P 500 futures, you can see yesterday the option market, if you remember, in the video, was only forecasting or predicting like about a 60 basis point move in totality, even with all the data we received yesterday. And in fact, what you could see is that we're just hugging the bottom of this sort of grinding higher channel and not a lot of volatility. So, people are starting to go into holiday mode, Christmas mode. Volumes are down, even with the data. And the problem about the data as well is the market, I think, is still, this is my personal view, the market is still waiting for absolute clarity on the real situation in the U.S. economy. Because if the Fed chair Powell, he himself said that the data collection, because the government shutdowns was not 100% perfect, and he also if you remember last week's press conference, said that he thought that the BLS was possibly overcounting 50, 60,000 jobs per month. So if you look at the situation, we got a very weak headline number for October, but that was the government shutdown. A lot of that was government workers, and also finally all of the workers who had taken voluntary buyouts from the Doge. They finally came into the system. So it's difficult to read too much into that. And then if you look at the November numbers, the headline number was actually quite strong. Well, a little bit higher than expectations and consensus. Came in at about 65,000 from memory. But on the other hand, you have the Fed chair saying, well, maybe that number is not super accurate. And by the way, maybe it's even it's overcounted. So what we're left with is a situation of a labor market which is not perfect. It's not collapsing. It's not really growing. And you can see here that the equities are just grinding towards the lower part of this recent trading range. So not a huge amount going on just at the moment. Now we do have CPI tomorrow. That may be a little bit more important as a final push as we get to the holiday season. Let's see how we go with that. The other interesting thing as well is that yesterday the average hourly earnings came in a little bit lower than expected, so a bit softer. So does that indicate a weakening labor market, less bargaining power from workers? Maybe that's going to be confirmed by the CPI tomorrow. So all that to say that the equities are just grinding a little bit lower. And just keeping on with the FOMC, what we do have today, we have Bostich, who's a little bit on the hawkish side. He's giving, I think, a speech. Keep in mind that he's going to be a voter in 2026, so that's going to be interesting to see the slightly more hawkish take in the economy. On the other hand, and this could be worth tuning into, is Christopher Waller, who apparently now is back in the race to succeed Powell as Fed chair. And because apparently Trump will be interviewing him, quote unquote, he's also giving a speech today. So it's going to be interesting to see whether Waller tries to go full dove, says that we need a lot more aggressive cuts just to placate and to please Trump as a job interview kind of speech, or whether he tries to pull back and say, hey, I have market credibility, I'm the voice of reason, I'm the adult in the room. And at this point, that may actually be beneficial, because we know that the bond market is nervous about a Trump stooge, a Trump puppet. And so maybe Waller's saying, hey, I'm going to present myself as the adult in the reasonable adult in the room. Anyway, interesting to see what he has to say. And just by the way, there's rumors and a bit of gossip going around the Twitter sphere this morning that Kevin Hassett is maybe less in favor. He's been seen apparently as not effectively communicating with the markets, not being accepted by the markets, and also not have done a great job in terms of driving policy at the National Economic Council. So it looks as though the stock of Kevin Hassett is falling a little bit. So maybe that leaves Walsh and possibly Waller still in the mix. We shall see. Anyway, let's listen to what he has to say. In terms of other stuff, we got overnight some lower than expected inflation in the UK, and it's kind of interesting here. Let's just look at the bonds here. You can see that the yields after initially popping, has come down a little bit, but basically the inflation came in at 3.2% versus the expectations of 3.5%. So that's lower than expectations, and also coming in lower than the previous reading, which was 3.6. So all to say that we have the BOE tomorrow, and this we have the BOE decision tomorrow, and this lower than expected inflation could seal the deal that the BOE will actually cut. And you can see the reaction here to the British pound. You can see the British pound here just at this sort of fib retracement level, has basically stalled out a little bit at about 134 and actually has weakened a little bit. So, if the BOE, the Bank of England, does come in tomorrow and cuts more or less now as expected, we may see a little bit of sort of weakening in the pound, maybe even against the euro or the Swiss franc, if not against the US dollar, which is what we're looking at here. In terms of the other currencies, to be honest, not a huge amount of energy. See the US dollar overall having a little bit of a pop. Possibly on the data yesterday indicating that retail sales were relatively strong. I forgot to mention, so retail sales relatively strong. So maybe the dollar having a little bit of a modest pop here. As you can see here, this is like the 50 from this impulse up from the 18th of September, and then the impulse down. You can see that we sort of essentially bounced off. You can call it the 50% retracement, had a little bit of a spike below. So I'm not sure how much we can sort of read into that, but the US dollar up a little bit today. As I say, we're getting to low liquidity, holiday trading, so I don't want to draw too many conclusions. The one market which did get a little bit of a reaction was oil, for a couple of reasons. We saw that, oh, where's oil? Just let me bring that up. So we saw that Trump has issued a sort of via Twitter, sort of actually Truth Social, a sort of a unilateral, sort of a total blockade of what he regards as sort of illegal oil tankers going into Venezuela or exiting Venezuela. So you see here that oil bounced. But now, keep in mind with oil here, that is a pretty key level there of about 55.37. You see it's a recent sort of low going back to May. And also you could argue that going back to the 20th of October. So it is a bit of a sort of a support level, which you can see was marked on my chart going back here to September of 24 as well. So a key level. And the market, I think, has just taken that as excuse to take some profit on the shorts and a little bit of reactive bounce. But nonetheless, Trump is definitely upping the ante against Maduro. And so, of course, if he blocks Venezuelan oil exports, obviously that's a geopolitical risk in general, and specifically it could take some barrels off the global market. Possibly even more important, though, just at the moment, we also had Russia. There was new sort of rumblings coming out of the US of potential new sanctions on Russia if they don't really sort of get to the negotiating table with Ukraine. It looks as though it's going to drag on very sadly into the new year. And so just on the possibility of, or the lower possibility or probability of an immediate ceasefire and sort of cessation of activities in that war. And also potentially new sanctions on Russian oil, making it harder for Russian oil to be sold. Plus the Venezuelan thing, all that to say that we do have a little bit of a bounce. But if we put that, let's just have a look here and look at a few sort of indicators here. Well, just throw it on, let's say, some moving averages here. So you can see on the moving averages, this is still very much in a downtrend. I mean, the most optimistic thing you could say about the oil chart is that, the moving averages are sort of flattish. They're not collapsing. But if you look here at the 20 and the 50, the 20 is definitely down. And we see we haven't really breached the 50-day moving average, which is the second one. Every time we've tried to test above that, it's been whacked down. So that's not looking good. And if you look at, let's say, a 4-hour chart here, just to have a little bit more granularity, is people like to say, I'll just get rid of these moving averages on the 4-hour. So this is a 4-hour chart, and you can say, oh, yeah, we had a bounce. But if we look at the bounce here, let's just look at the actual magnitude of this bounce. It was, $1.73. That's fairly sort of modest. Let's not get too excited. So I think really for the bulls, even on a very short term, 4-hour basis, I mean, would have to look at something like, just to put this in perspective. So on the 4-hour chart, just going back to this little spike here on the 5th of December, you can see here that this so-called bounce in oil hasn't even mustered up a challenge to the 38% fib. As you see, a bit of a sort of a level there at $57 on the WTI. So until and unless we at least get to this 38% fibs, but I would argue we have to grind through this 50% fib at 57.60 and then above the 58.30. There's nothing bullish at all about this chart. This is simply a bit of profit taking, and a bit of an excuse, some kind of random headlines. Although I think Trump, is to be taken seriously in a certain sense. But as I'm trying to say here is that oil. I wouldn't get too excited just at the moment. The other things to be keeping an eye out for is just keeping an eye here on silver. Gold is taking a little bit of a pause. You can see here gold popped out, but actually just taking a little bit of a pause here. Really, silver is the one. I mean, no, I think we all know this, but looking at silver futures, absolutely extraordinary. Just another, sort of strong move upwards. We're now getting, if we look at this Fibonacci sort of extension here, just going back here, you can see that we're now getting into the second levels. We got across the one. There was a bit of a pause there. You've got to say, if the market wants to keep on going with running with this narrative, that possibly the next target would be 71.70 up to this 1.618 fib extension. Certainly up there, I expect it to take a pause, maybe pull back a little bit, consolidation, profit taking, whatever. But basically, the precious metals are still moving. Of course, we can keep on trotting out the same old, sort of comments about, sort of debasement trade and whatnot. I think here at this point, there's possibly not a huge amount of volume, and there's not a lot of resistance here. Any shorts are being sort of carried out on stretches, so it looks as though it's grinding higher. Can you get in at this point? This is, you at least want to be waiting for some kind of pullback to 61.80 or something like that. Let's just see, let it go. Just curious to check in with on some of the other precious metals as well. Interesting that platinum, as you can see here on the ETF PPLT, has again, a nice bull flag here extending higher. So platinum participating in this sort of rally. If we look at palladium, also testing double highs, like a double top here or recent highs. So all of the precious metals going. On the other hand, if we have a quick look over at their cousin, copper, a bit of a consolidation. It hasn't done a huge amount wrong here. It reached the 61.8% fib retracement at about $5.50 here. It's taken a bit of a pause, but the interesting thing from the bulls' perspective is that it's only for 2 or 3 days, a bit of sideways consolidation. It hasn't really fallen down that much, and as you guys can see here, a bit of a sort of a green candle, a bit of a semi-engulfing. Well, not exactly an engulfing, but let's say fairly strong. Sort of green candle here. So the next step up, it needs to retest this 61.8 fib, a retracement, which is this sort of recent high at about 5.51. If it can get there, that's the first test. And then, the second test, as I say, just looking here at some fib extensions, would be at least to get up into this, this sort of zone up here about 5.6, 5.7, 5.75. And the metals are doing quite well, although, of course, copper does work or does move on other factors. Okay, guys, I might leave it there. Not a huge amount of data today. As I say, we have the CPI tomorrow. Let's listen to what Waller has to say, and also Bostich. And I believe, if I just saw something, I think Trump also is speaking. I think it's tonight at 9 p.m. Eastern, with potentially, no doubt it's going to be a sort of a bragging session about his accomplishments. Oh my God, I can't say that. Accomplishments for 2025, and maybe even teasing a few policies for 2026. We shall see. Personally, I will not be listening to that. I have other things to do, but that's it. Okay, have a great day, great trading session if you're trading, and we'll be back tomorrow with some comments about the CPI, do a CPI preview. Thanks very much. Have a great day.